Hello, everyone. I was looking at my fair value gap video and I noticed it was really blurry. And I've had a few people comment that they couldn't quite see the things I was pointing out. And that's a very, very important part of my trading strategy. So I wanted to do another video real quick. I'm probably going to end up removing that one eventually just because the quality was so awful. Um, I'm going to do this one in trading view, provided I can get to my tools here. Let's see. Okay, so there's my drawing tools. Um, I'm going to see if I can get regular trading hours. And then what we'll do is we'll look at this right here as a gap. Right here. This blue line just indicates the open. But if we were going to mark out that gap, we would go from, well, it's just going to put it right there, isn't it? We would go from the bottom of this little white candle here. Looks like that's pretty close. And then it would come all the way down to the opening candle here, the top of it. So that would be the opening gap. And I can label that for you if I can see to type. All right, so there we go, opening gap. These candles traded up into the gap, but it never did fill, at least not yet. Typically, gaps like that will fill eventually. So that's an easy gap to spot. It's when you're looking at a chart, you can see it right away. Doesn't take any special tools to look at it. You can see another one right here, opening gap. What we're looking for is a little bit different type of a gap. I'm going to go ahead and change this to fair value gap so I don't have to create another box. I must be the slowest typer in the whole wide world, huh? Okay, so for a fair value gap, what we typically do is look for highs and lows. I'm going to put this on a little bit longer time frame real quick. And we'll just mark out some highs and lows. There's a high. We'll do it within these blue lines. This, I see a fair value gap right here. What we're looking for is this. If you can imagine, if there was a candle, one white candle that went all the way down here, and the top of that wick and the bottom of that wick would be the gap. So right here, you can see the bottom of this little white candle. There's a tiny little wick there, and then the top of this little blue one, this area right here would be considered a fair value gap. So I would grab my little thing here, however I can grab it, and I would move it over here and we'll paint it up. Okay, so from the top of that, bottom of that little candle to the top of this blue one, it's not a giant fair value gap. This is a 15-minute candle, so it is pretty powerful. So, and you can see this one didn't even come back into it. That was your only opportunity to enter. And then from the bottom of this one to the top of that one, that's another fair value gap. What I can do maybe here is maybe I can clone that one and I'll just move it down here for that one. Okay, so not a very big one, but it is one. From the bottom of this candle to the top of that candle, that's also a fair value gap. So let's clone this one. we'll just put it right down there on it. We are looking at live market conditions here. Let's see. Yeah, right there. It's not a very big one, but it is one. Now this one, the bottom of this candle and the top of that candle, there's no gap here. So we're looking at the bottom of this one and the top of that one. Bottom of this one, top of that one. And that leaves on this candle, there's orders in there that did not get filled as it was going down. So it also means price is moving rapidly through there. And oftentimes a fair value gap will get traded back into. When they form like that, a lot of times the bodies will always respect this white dotted line. That's their 50% mark. And that's where we are right now. This is actual live market conditions on the ES. And you can see it really took a big nosedive today. Oftentimes, when you see a fair value gap form, you'll see candles go up into it, giving you an opportunity to enter. If we go to a smaller time frame and look at these fair value gaps this way, we might be able to see a little better situation. So this is on a 5-minute time frame. So we would have to adjust our gap to the bottom of that white candle down to the top of this white candle. Right in this area is where you would want to enter on a short, on a 5-minute. So this fair value gap, if we move to a 5-minute, we adjust it to the bottom of that candle right there. I need to move this one over so we know which candle we're looking at. Bottom of this little white one to the top of that one right there. And so from the bottom of this one to the top of that one. And on the 5-minute, I don't even think this one even put up a fair value gap, so we can just delete it. I usually use the 5-minute time frame as my guide. You can see a tiny little gap there, but I wouldn't even worry about that one. What we're looking for really is we've taken out a recent swing high. Maybe like these swing highs were taken out. It didn't go all the way up here, but this is also a fair value gap right here. So we may have traded up into it a little bit. You can see that one right there. From the bottom of this little white candle, the bottom of this one to the top of that one, that's a fair value gap. And if we extend it out, you can see price traded up into it, respected the halfway point, and that's where it reversed. So from there, we would say, okay, well, we've respected that fair value gap, and now we've traded back up into this one. You wouldn't want to enter here because it usually revisits it. And we want to see it respected. So when you see a fair value gap like of that size, then you could enter somewhere around here as this candle's coming back. The 50% mark is a good rule of thumb, but a lot of times it won't give it to you, especially on a strong move. It won't give it to you. And that today was a really strong move. And on the 5-minute, you can see there's another fair value gap here. And then we have one marked out here. I'm going to toggle this like I did on the previous video. And you can see from the bottom of this wick to the top of this wick, that's our gap. This candle, it doesn't appear to be a gap like this one, but that's what we're just referring to it as a gap, because there was such a fast move through. Some orders would be in there that didn't get filled. That's one of the explanations I've heard. It's called a sell side imbalance, buy side inefficiency. And so people that had orders in there, maybe some limit orders or something that didn't get filled, the algorithm is going to want to go back into that area and trade to fill those orders. So you can see my box doesn't quite go to the bottom of that one. But that's a fair value gap. When I toggle it on and off, should be able to see it there. Okay, so now I'm just going to go back in time a little ways. We can see this one here is I'll toggle it on and off. A big white candle moved down. I've got mine as white and blue just for my eyes. It does seem to be getting really blurry eyed for after looking at the charts for a while. But the top of this white candle, bottom of that white candle, this one created the fair value gap. If you were going to enter a short, like say on this candle here, see how it traded back up into it? You would want to put your stop up above that. And then we watch take profit. If you can get 5 points out of the run, that's $250. Do that average per day, you'd be looking at about $5,000 a month. It's not a bad paycheck. A little extra money in the pocket. So let's keep scrolling until we can see if we can find another one. Looks like we had a big opening gap right here. And that we ran out of contract. Oh man, I just moved my line of demarcation. I don't even know where it was now. Let's go back to electronic trading hours for a minute so I can see. Okay, so we were up. So we can see we hit a high here. A lot of times price will do that. There'll be stops sitting above that. So it'll go out, it'll take it out, and then we'll reverse. So we'll zoom in on this reversal and see if we can find a fair value gap that would indicate we're heading south. Now, I'm so sorry. Here's where regular trading hours might come in real handy. So here's our little peak, our reversal. It kind of removes out all of that other stuff that was in there. The overnight sessions, for example. Here we can see a high point. See, it took out that one. We can do a reversal on the low end, like right here. So we had a little bit of an opening gap. Let's see if we have a fair value gap in there. See all these candles, that wick and that wick overlap. This wick and that top, they overlap. That wick and that wick overlaps. That wick and the bottom of that candle is a very, very small fair value gap. I don't even know if I would call that one, but I would call it one, definitely. And you can see price did react. But that's the thing about rules. You want to follow your rules all the time. That is a fair value gap. And price has already moved a long way, but since it didn't form a fair value gap, we don't get in it. This one formed a little bitty fair value gap there. Price traded back down into it. Didn't give you much of an opportunity to join, but you could just see if you were to put a sell order. Let me try the other side. I don't know why this one won't let me put in a limit sell. There we go. If you were to put in a limit buy, a buy stop right there, when that traded back down into it, it would fill your order and then continue up. And then you can put your stop loss. It would be down here below the candle that formed the fair value gap, which that's a $200 loss. And your take profit would be, you could just do 200 or 250. A 5-point gain would be a good starting point. And you can see it would have gotten you there no problem. Go ahead and close that out. Now, you can see here is another fair value gap. We didn't trade back down into it. So you didn't really have an opportunity to join. That one being the very first one to form, that's what I would have done, was exactly what I said about putting a buy stop in there, right there, and let it fill. And then we have fair value gap, another fair value gap here, a tiny one here, and then we consolidate. Consolidate, consolidate, consolidate. Now we have one going the other way. I'm sure you can see that one. Big white fair value gap right here. You put your order here, never fills, which that's a good thing. Did you lose out on a little opportunity? Yeah, but you don't want to get caught by something like this. If you tried to get in, I mean, the fair value gap isn't even formed until this candle's finished, and it went ahead and shot on down, and then there's no gap here. See these candle wicks touch each other. You can see my little white dotted line. Then we have a little one here to the upside. It gets tested, so we could go ahead and take that. When you have a lot of upward momentum, it's better to go ahead and do those. Follow that trend. So you can see a little one right here. It's said in the industry that the candle bodies tell the narrative and the wicks do the damage. So you can see these wicks, they were coming out, they're taking out stop losses for people. But the bodies, they've respected this little fair value gap. So you would be good. Go ahead and put your order in right there, a buy. Price would have wicked down, caught it, and then you'd have been good for whatever take profit you wanted. And we have another fair value gap right here. See that one? And this is what I do when I'm trading. I don't always draw them out, but I'm dang sure paying attention to them. And then we got another one from the top of this candle to the bottom of that candle. You notice how this one doesn't even have any wicks. Price really moved fast through there. Got another one upside there. So any of these, this one you didn't even get an opportunity to join, but this one you did. So there's a little theme there. The very first one here, you had an opportunity to join. This one you didn't. And this one you didn't. It just kept on going. And this is on a 5-minute time frame too. So I mean that price is really zooming up there. So maybe that first one you see, go ahead and put in an order. If it doesn't catch it, it doesn't catch it. But if you would have gotten in there, we got fair value gaps here, a small one here, 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 and even one there. But then we stopped. Now we have one to the downside. It gets poked into, but not taken out. You see that right there? Little bitty one. Zoom it in so we can see it better and make sure I get my lines drawn right. Yeah, the bottom of that wick right here and the top of this blue candle there is our fair value gap. Right there. In that case, our stop loss would go up here. We would put a sell order in here. After this candle forms, that forms our fair value gap. So then you could put your stop order. This one would be a sell one at the 50% mark. It's not going to let me do it exactly at 50% mark. So this candle goes down. This one comes back up. Fair value gap is created. Candle bodies tell the narrative. They're going down, down, down. But look at the wicks. They're doing the damage. They're taking out the stops. So if you would have, after this one formed, put your sell limit in there at the 50% mark, it would have filled your order with that wick right there. Your stop loss would have been up here. That's a $125 stop loss. I would go all the way to the top of the wick. $162 stop loss. Target profit of at least 5 ticks. 5705 to 5701 even, right to there. And you can see it would have got you there and it would have already filled you. Um, that's what I recommend doing in the beginning. Oh no, that's not quite going to be 250. Just try to get your 5 ticks, 2705 to 5700 even. Just try to get your 5 ticks. Try to get. You see the fair value gap. Try to get 5 points out of it. Once you do that over and over and over again, you'll start building confidence in your trading. You see the fair value gap, you try to get 5 points. Don't move your stop. If it gets stopped out, it's part of trading. That's the way I trade them. As you can see on this, we had from that one. I mean, if you really get once you start getting a little more advanced, you can target a swing low as your target instead of 5 points, and that's quite a bit of a run there. Close those out. So this would be the overnight hours. We open a new day. This is at 9:30 in the morning. We're looking for a fair value gap. I don't like to take this is New York time, by the way. UTC4. That's what you need to set your stuff on. I don't take any trades before 10 a.m. New York. So at 10 a.m. New York, we're looking for a silver bullet. You can see we have a fair value gap form right here. Not big, doesn't have to be. Was it respected? Absolutely. Your order at the halfway point wouldn't have even been filled there. But you still don't want to chase. If you didn't get filled, you didn't get filled. Typically, what I do when I start seeing stuff like this is I go to a lower time frame. Oh boy. Now what happened? I don't even know where we were. Maybe right there. Okay, so yeah, I would go to a lower time frame here. We had those wicks down here. We got a higher high, a higher low, and a higher low. So then I would start looking for fair value gaps in that situation. But still, I mean, we have one here. Still didn't get an opportunity to enter. Right here would be our only opportunity, and it still doesn't even go down to our 50% mark. So you might have just had to miss that trade. That's just a really nice move up. And with this fair value gap to the downside, you would want that to be completely taken out before you try to get into a trade anyway. So maybe here we take it out. Maybe you could enter on one of these, but it still wouldn't quite get to your 50% mark. 50% isn't required, but it is recommended. Here's fair value gap to the downside, no opportunity for a retrace until we get here. On a 5-minute candle, that would probably be the one. Let's take a peek. Yeah, that's the one we marked out earlier. On the 5-minute candle, it came back up into it. But you definitely want to wait for that retrace. You don't want to jump in down here because that's $200 or $300 right there. So you definitely want to be patient and wait for that retrace. If it doesn't come, it doesn't come. There'll be another setup and it will come then. But typically I look for these between New York time 10 and 11. And in the afternoon session, if I trade it, it'll be between 1 and 2. I'm sorry, 2 and 3 New York time, 1 and 2 Texas time. So if you set this to UTC 4, will be 2 p.m. to 3 p.m. It's not quite there. That's when we'll be starting to look for these. And that one formed at 155, came and retested at 210. We're in, we get our 250, and we're happy. Or if we're really feeling froggy, we aim for the low of the day, and we make $1,000 or something like that. All right, so see how long this candle is right here? It does form a tiny little fair value gap, but you want to watch, make sure you're not seeing candles overlapping whenever you're seeing a fair value gap. There's a tiny one there. There's a little one right here. It gets traded back close to it. You can see the bottom of that blue candle and the top of that blue candle forms a fair value gap. I'm wondering if I change the candle color, if it would be easier to see. Let's try it. I'll make them a lighter blue. That's almost the same color as the, yeah, there we go. But the wicks are still, yeah, you can see them a little better. So yeah, the bottom of that wick, top of that wick, fair value gap would be formed by this candle. Order, it wouldn't have quite got your order. You can just kind of watch price action there and see. That's a really nice one with the volume and efficiency. Goodness gracious. That was a monumental move to the south. All right. This is a very, very important part of our trading. We look for a thing called the silver bullet between those hours of 10 and 11 New York AM session and 2 and 3 New York PM session. Just look for a fair value gap. You put an order at the halfway point, put your profit at $250, your stop loss at the top, the candle that formed the fair value gap, and you wait. You just wait until your order either fills or your stop loss fills. Either way, that's trading. All you can do is follow your rules. And that's the rule. Fair value gap, 50%, wait. Now, one thing about TradingView I don't like, every other program I've used, and there may be a way to set this, but you can set these, the stop loss and the take profit on my other programs, just as soon as you place the order. I'll give you an example over here on my practice account. Let's just say I hit buy.
Order filled.
See how they come in automatically? I wish they would do that in TradingView, but I haven't figured out a way to get them to do it. So I'm not going to keep that order on there.
Order filled.
Yeah, I haven't figured out a way to get it to do that. But it's okay. You can just drag them just like I did just now. But that's it. Fair value gaps. I am interested in hearing if you have any questions. You can just comment on the video. I should be able to see that. I do think if I would have changed the color of these candles, y'all probably would have been able to see it better. But I think you can get the idea. Bottom of this wick, top of that wick. So they don't have to be huge. They just have to be respected. And that's giving you the narrative. Okay, the algorithm wants price to go lower. That's all we're looking for. Good luck, good trading. I love each and every one of y'all. Be kind to yourself. Be kind to each other. Thanks for watching.